So hey guys, what's up? What's up? How are you guys doing? Welcome to 2020, and we've already started trading. And yeah, I've been off for the last 2 months of last year, and the first 2 months of this year. This is my first video this year, and yeah, I hope to be releasing one sharing one trading strategy every single month starting this month. Okay. Yeah, so without further ado, there's a strategy that was brought by one of the guys we trade with in our war room. We call it a war room. 2021 kind of started in a relatively nice way. We were able to acquire some space. I'll be sharing a video of that space very soon. And we call it a war room. So it's basically a bunch of guys and girls sitting and sharing ideas, and there's quite a good number of us actually. I'll be talking a little more about the war room and how you can get in. I mean, it's absolutely free of charge as long as you live within my area code. Then you can always pass by and check out trading ideas, ask a few questions and stuff like that. But yeah, today it's about this strategy that was brought up for discussion, and I looked at it and I thought, yeah, this is a really good strategy, both for the beginner and for the professional that loves to have their trades automated, and basically it's really a good strategy. I'm going to go through. I'm going to give you. I'm going to break it down. So here it is. It's called the 150 SMA trading strategy, and it basically deals with just two simple moving averages. So the first one is this red line, okay, and then the other one is this blue line here, okay. So this is a 150 period moving average, the blue line, and this red line is a 50 period moving average, okay. Now, the reason why there are two of them is because this is the high. So this is the 50 high, and this is the 50 low. Okay. So similarly, this is the 150 high and the 150 low. Okay. So trading rules are pretty simple. We're just looking for the market to move from outside, and so there are two zones in this trading strategy. One is a trading zone and then a non-trading zone. Okay, so for as long as you have the 50th above the 150, you're considered to be having buy conditions positive. Okay, and if you have the 50 below the 150, then you have sell conditions positive. Now, conditions for entry is that price has to move from oh, why is this doing this? Okay, so price has to move from a non-trading zone into the trading zone. Okay, I hope you're following this. Okay, price is first outside a non-trading zone. Okay, because we have the 50 above the 150. This is a bullish market, bullish trend, and price has to be inside this non-trading zone and then move into the trading zone. Okay, so you take the first candle that closes into your trading zone and open a long position, and then so my own modification was, since we're dealing with the highs and the lows, then I won't want to exit this position too far. Okay, so we exit as soon as price moves into the non-trading zone. So I'm going to look for a similar condition, the first candle to close in the non-trading zone exits my position. Okay, so just to give you a quick peek of how this actually works, I'm going to run it on Aussie dollar. Okay, and we're going to look at a few entries, and then yeah, I'm also going to give you why I think this strategy, well, where it actually fails. Okay, so first of all, I believe it's really good. Okay, so first we have a sell position there. break even, and just to secure some pips there. Why do we open a sell position? We have the 50 below the 150. Okay, so we are really good to go. Okay, so take profit is 150 pips, but because this is already automated, I already did the automated version of this, and that is what you're watching right now. This is the bot executing on historical data. So as soon as you have this a bullish entry here, as soon as price moves back into a non-trading zone, the position is closed. You have a bullish entry, okay, but then as soon as price swings straight into the non-trading zone, the position is closed immediately, like immediately. So you see this didn't like give us the chance to break even, because I set the break even at around 50 pips. So there, once we cross 50 pips, then we secure 5 pips in profit. So depending on the lot size you're using, this is purely for demonstration purposes, and so you can see I'm using 0.01. I mean, if I were using this on a live account, then I would probably be using different or slightly bigger lots. Okay, there we look at a sell position that went wrong and price closed in the opposite direction, and so we had to exit it immediately. And that's the beauty with an automated system. It thinks in simple ones and zeros. If it's not a 1 and it's not a 0, then it's nothing. Exit that position immediately. So we have another example here. Price, the candle closes inside a non-trading zone, a non-selling zone, and we exit the position immediately. Okay, bullish, exit the position immediately. So the beauty of this strategy is that your losses, even if you were to have a string of 10 straight losses, they're always managed straight between the high and the lows. The range between the 50 high and the 50 low is your max loss limit. Yeah, and then but then the so yeah, that's the max loss limit. And then the advantage is that once you hit a huge swing like this or trend like this, believe me, you're going for 150 pips, and you're also going to trail your position. You have the availability to trail your position. So the losses are really tiny, really tiny. I was so excited when we started talking about this, and I just thought, yeah, this one I have to share like immediately. I mean, we just have to put it up there. So let's see, we have like about how many losses? 2-3 losses, something of that sort. And then I also included the default profit recovery system. So whenever we have a loss with 0.01 or whatever lot size, it simply adds 0.01. So you keep on increasing instead of using the, I call it arrogant martingale system. So yeah, it really is a system that I think would really work for anyone. Yeah, very tiny losses, and it's easy to follow as long as the trend is down. It's just two simple moving averages. So where is the drawdown with this strategy? Yeah, when you look at an area like this, I'll just pause the video just a little bit. Let's see, move this there, and when you look at an area like this, this is a flat market. Okay, so you're going to see a lot of this happening whenever the market gets into a flat area. Okay, flat markets, yeah, not good for this strategy. These are the points where you can have a string of losses. And if you're, so let's just a quick example. We have 1 loss, 2 loss, and 3 losses here. Okay, so this is 0.01, 0.02, 0.03, and so when we get another opportunity, we're opening with 0.04. We're not even at 0.05. We're not at 0.1. No, this is pure risk management. Okay, and as you'll note, I also do not have a stop loss. Okay, on this. Why? Because basically this is basically an automated system. So the algo does all the execution for you. So I don't really need to put in a stop loss at this point here. Let's just go. I want you to see the buy side of this Let's see if we can get a few buy positions, and not going well. Yep. So look at that. Look at that. Look at how long that spike was. Okay, look at that spike. Wiped out accounts last year. Wiped out accounts terribly. Okay, so that's one of the beauties of having or using an automated trading system. Um, let's just go. Let's just continue. I need you to observe the flat markets. Okay, and see how the flat markets are usually the ones that are most damaging. I think you know this principle, wicks. Yeah, wicks, and you can confidently open 150 pips, and yeah, so even though we have a reversal here, so what pattern is this? Bearish flag. Okay, so your 150 pips is more or less of a sure deal or something of that sort. Yeah. Let's go, let's go, let's go. There is the trailing. You saw the trail? There we go. Okay, so your basically your trades are safe. Your trades are secure, and just in case you're thinking of having, say, like a zero stop loss, because this is one of the issues we're discussing. Can't we have a zero stop loss? Because when you look at where price is right now, okay, we hit 150 pips, but look at how long the trend is still moving, really way down this side. I mean, this is like a wonderful, really wonderful trading opportunity. But if you're trading this manually, then I would have to insist you use the fixed stop loss and take profit, and then trail your positions manually. But if you're using an automated system, kick back and go to Hawaii for holiday at the end of the year. Let's just so yeah, look at this. So this was 150 pips take profit sure deal. But when you look at this range, this is more than 300 pips here. This is close to 500 a 500 pips move. Yeah, so this is something that I think yeah you would want to consider with your and also depending on the asset you're trading. If it's gold, you basically have to do a few back tests to determine what is the best, what would be the best take profit and stop loss level for consistency, such that at every one trade, because the point here is that every trade should be won. Every trade, you don't want to lose. We don't get into this business to lose. Okay, so the deal here is to win every single trade. So if the take profit for a particular asset is about 10 pips, then set 10 pips. Make sure your lot size will give you a return value of $1 for every pip movement. Okay, and then in that case 10 pips would be about $10 per trade. Okay, so if you say in a day or in a week executed about let's say 20-30 trades, then you'd be looking at approximately $300 in a week. Okay, so yeah, risk management and all that, but yeah, I just thought I'd share this one with you guys because it's yeah, it caught my fancy, it tickled my fancy. So I was just thinking, hey, yeah, I haven't been on YouTube, I've been MIA. So as we kick off the trading year 2021, it would be good if we could share something that would be of use to, well, both the newbie and the professional traders that are out there. So yeah, there we have two positions. Take profit hit. So now we're looking at the buy side. The long side, we have yeah, the 50th above the 150, and so we're strictly looking for long positions. And there we hit the first take profit, and then there's another. Just let's just wait and see. Okay, so that closed at the trail. Yeah, let's see how far this one will go. Closed at break even, closed, exited the trade, entered the non-trading zone. Okay, so you look at that price is moving inside a non-trading zone there. Okay, so we have the 50th above the 150th, but price is in a non-trading zone. Now the two MAs are in an entanglement, and so we're not opening long positions. We're looking for short positions, and there we have another. I just yeah, let's just give it a few more seconds and see, look at a few more long positions if we can get them. Okay, exited there. Okay, so I think you get the basic idea of the strategy. It's a trend following strategy, really beautiful. This is I mean, your losses are managed between the highs and lows of any at any one time, and so I think this is more like maximum gains, minimum losses, and take profit hit right there. And yeah, for as long as you follow the rules, discipline, you'll always be on the winning side with this trading strategy. Okay, position that will I think that will be the last position for this here. Wait a second. Yeah, okay, fine. So basically, you get the idea. Okay, so with that, let me wish you guys a happy trading year, trading whatever. You can send us an email at Forex Trading UG. Join us in our Telegram group, all that free of charge. And yeah, happy trading and nice to see you guys once again. Okay, see you in the markets. Adios. Nice move right there. Nice move right there. Break even. We're trailing it and take profit hit. Beautiful move right there. Beautiful move right there. Let's see if we can get one more. Nope. Okay.